Hello and welcome to how to pay no or less gas fees.
You must know these so that you can maximize your profit, and everybody is happy when they save money. We're gonna go through a few items in the following video. The topic we're gonna cover is how to use limit order for free, what are the layer 2 solutions you can use, how to plan your transactions strategically, and what derivatives platform are available for you to use, and a little tip for NFT traders. First of all, what is gas?
Gas fee refers to the unit that measures the amount of computational effort required to execute specific operations on the Ethereum network. Gas fees are paid in Ethereum's native currency, Ether, also known as ETH. Gas prices are denoted by the term gwei.
Essentially, gas fee is the price that you pay to get your transaction processed by somebody who uses their computer. They use their computational power to process your transaction. So you pay this amount of fee for them to get your transaction done. You can see this chart we have here. It fluctuates quite a lot. Essentially, this definition is a lot of bullshit. You can see this chart here. There are a lot of spikes. When there are a lot of transactions in the network, the gas fee will be high because there are a lot of transactions for the miner to get through, and if you want to get it through within 30 seconds, you will have to pay a really high price. So this is going on because since last year there is a huge crypto boom and the activity got so much that gas fee is unaffordable. Essentially, you can see the screenshot from fees.wtf. This person has spent 30k ETH. That's a crazy number. What can we do? How do we reduce the gas fee when we do transactions on Ethereum network? So first, the solution is move your assets to layer 2. What is layer 2? Layer 2 are a scaling solution. The biggest reason for them to exist is to help with the gas situation. So when the fees on the Ethereum mainnet is so unaffordable, people go to these layer 2 ecosystem to do similar trades. The first one I really like is Arbitrum, Avalanche, Polygon, Optimistic Ethereum. These are all really good layer 2 solutions. Especially Avalanche, they have very good user interface for the platforms. Within these layer 2 solutions, you can find a decentralized exchange, margin trade, or lend and borrow, all sorts of projects. They have their solution on layer 2 as well, just because layer 1 gets too expensive for normal users. So when it gets very busy, the gas fee on Ethereum can get to, say, $300 per transaction. So far on layer 2, it only costs less than $1. So here, let's take a look how to move your money to layer 2. First, example from Avalanche, they have a website for the bridge, so you can bridge your asset from the mainnet to Avalanche. And here you can see when you send more than $75, you'll get an AVAX airdrop.
So the miners on the Avalanche network are paid in AVAX and the miners on the Ethereum network are paid in ETH. So the reason I like Avalanche the best is you can transfer any currency onto Avalanche and you will have a certain amount deposited to allow you to trade and swap on the Avalanche network immediately.
However, you will have to be cautious. Some of the tokens don't have liquidity on Avalanche. That means once you bridge the token over, you might not be able to swap to any other assets. So that's something you have to look for. Another solution, we have Hop protocol. So this is a place that you can bridge assets to multiple network. We can see the screenshot here. You can send USDC from mainnet, Polygon, XDAI, Optimism, Arbitrum to another network, and then you can also select the assets. Of course, this is very limited asset selection, but if you want to stick with the basics, this Hop protocol is a very good place to go. Second, trade on crypto derivatives platform, and you can earn trading rewards. What are crypto derivatives platform? One example is DYDX. So this is the interface of DYDX. You can see there is a really powerful trading graph. You can see there is a really powerful trading graph over here.
You're able to put your own analytics in the indicator tab in order to read the graph how you choose to read the graph.
Yeah, and then initially you can deposit some USDC for the trading fund. It charges you a gas fee, but that's about it. So you only have to pay the gas fee once, and then you can trade down here with market order or limit limit order. So for market order, you will pay 0.1% fee. Limit order, you will pay 0.05% of fee, which would be a lot cheaper than the gas fee that you will be paying usually. What's even better, depends on how size you're trading and how frequently you trade, you get trading rewards, which is in DYDX token. If you accumulate enough rewards, you can claim it and sell it for profits.
It's just an extra little bonus that the regular stock market doesn't have.
Nice. DYDX is Ethereum mainnet, and if you already move your assets to layer 2, there are also very good platforms that's similar to DYDX. For example, on optimistic Ethereum, we have Lyra. You see, it's quite similar. You're able to earn rewards, and then you can trade these pairs, say Ethereum, Bitcoin, Chainlink. There are more options on DYDX, and personally prefer DYDX. The third option you can use is limit order for free, and the platform I will demonstrate today is Matcha. So first, what is limit order? Let's go to Matcha and take a look with a real example. Okay, so now we're on Matcha. Let's take a look what limit order is. We can see here you pay this much uni price expires in, you receive USDC. So say you want to sell 1,000 Uniswap token, and you want to sell when it reaches $20. So here, within 3 days, if Uniswap's price reaches $20, it will execute this order. Versus market order, you just trade at whatever current price is.
This is a very good option for those people who want to swing trade and don't have the time to sit and monitor.
It's very nice that they also have this line that tell you what price that you have set, and you can see it has never reached $20 in a month. So maybe I want to set my number lower like this. And here you review limit order. This is all free, so you click review limit order, and this is free. So here you can also set how many days or how long you want this order to be valid. Say if I set 10 minutes and the price didn't reach 17, then this order will be cancelled. But if say you want to cancel it, say within 7 days, and I said expires in 7 days, you will have to pay a small fee to cancel it. And say if you haven't traded Uniswap at all on Matcha, you will have to pay a small fee to approve this token first. But you will have to do it on other platforms, so you are still saving gas fee in this scenario. Alright, let's get into the fourth one. Strategically plan your transactions. This one is very straightforward. So whenever you approve a transaction, there will be a pop-up window from your MetaMask. If you're not in a rush to get this transaction done, you don't have to pay current high gas fee. You can set a low gas fee and wait for the gas fee to drop. Then the transaction will go through. So say I want to send somebody some ETH. Here it says estimated gas fee, $12. And I want to save money, pay say $4. I can go in here, click edit, and advanced options, and see current gas fee is $200. I don't think it's going to be $200 late at night. I estimate it might drop to $80. That's more normal. And I click save. And then I click confirm. So in this case, this transaction won't go through because I'm paying lower than they want to. Once the transaction on the network dies down, they will take gas fee and process my transaction. If it never drops to 80, then you will have to wait till it drops to 80. So if that's a never case, you should bump up your gas fee. So you see here, it's pending, and there's a button called speed up. You can click this button or click on the transaction and then go click speed up. Say 50 or 80 to be more realistic, and then go save. Done. So once the gas fee drops to 80, it will get processed instead of 10. If you don't have any other transaction going on, you can just wait, and then it will get dropped automatically by the network. And you pay a small amount of fee for canceling. And the last one is reserved especially for NFT traders. So how do you save gas fee when you trade NFTs? This Genie.XYZ will help you. Let's go take a look what Genie.XYZ does. So now we're on Genie, and you can see here you can add NFTs by clicking this button. And if I have lots of NFTs in my wallet, I can select them all. and sell them in one batch. So this says pretty much what it does. The NFT market aggregator. It jumble up all your NFTs and you can sell them in one go, and it saves your gas fee. Another way, you can buy NFT in bulk. Here, let's take a look at their FAQ. What is Genie.XYZ? First ever NFT marketplace aggregator. You can batch buy and sell across all major marketplaces in one transaction, and it doesn't charge any fee. Here is a section that explains why it's gas efficient. I won't go in detail. You can read it. Over here, you can add NFTs to sell and receive in ETH or in NFTs. There is a scenario where no instant liquidity found occurs. That means Genie.XYZ is not able to find you the buyer when you want to sell. That's about it for today's video. Hope you enjoy the content, and if you have any questions, you can drop your comment below.
If you want more videos like this, please give it a like or comment what you want to see in the future. Follow this channel for more tips on how you can invest in decentralized finance. Find the DeFi products that will give you the best return. We also cover DeFi projects like NFTs and play to earn. Stay tuned for more content. Don't forget to like, comment, and subscribe. Have a good day.
Bye.